following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome to the show. Thanks for joining us today. I've got gold up on our screen here, and we're going to get right into that. This was a, without question, $80 range yesterday and eclipsing those up for hours, coming back and retesting with a little bit of noise. So again, the number to pay attention to, without question, again, is 1198. We talked yesterday about not having a close below here, so not paying attention to the retracement back up into this, treating it as an intraday volatility move. And when we got back above 1151, you could look at that as kind of a buying opportunity based on your premonitions in gold in general. I mean, I've was relatively bullish based on the dollar situation and a couple other things on gold in general, and now we've got a close above and a retrace back into today already. And just to state some numbers, our high yesterday was 1220. We closed around 1218 on the actual exchange close. And we've pulled back today into 1191, which is a little bit farther south than 1198 that I like to see. But right now we're sitting around 1197, so kind of in a precarious area. But again, I think the leverage at this point is the close above, the retrace back in, and we could see some higher drifting prices in gold in general based on that alone. And I like the way this navigator is acting down here. I like the way, and I'm going to go back in time here. I like the way that we had, to some degree, had a divergence over the intermediate situation. And as we look at the weekly, your targets above are still going to be this 1243 general area up top. So that's kind of what I'm looking for. We kind of stayed away from gold as we got down below 1198 for a while there. But, I think we're in a high probability situation at this stage, and I don't think you can ignore it. Take a look at the treasuries here. And what we want to do here, if I can get my charts to come up, this might be a CME issue. So I'm probably going to move away from this based on the CME here we go. Got some charts coming up now. All right, we're in business. So let's take a look at the 10-year. And we talked yesterday, don't have the daily. I need the daily, guys. We talked quite religiously about this 126.10, 126.02 area DMZ and the launching pad thereof. You're not going to have things go up in a straight line. And the daily situation, let's see. Let's pull this up. Let's just check our quotes here on the daily. Let's go down to the 10-year. All right, so the daily, we're attempting to have a new box, and that the current box, and this is the cool thing about not getting the charts, actually. It's kind of a great example of how you can get all the information right out of the scanner. So 126.02, as you can see that mouse over here, bottom of our box on the daily, and then the top is 126. Let's just call it 50, so that'd be 126 ballpark, 125, 32, 16, 17, 16. So here we go. Jeez Louise, we do not have our boxes up yet. Okay, so we're going to sit tight on that. Let's just move on to something else until we get a better deal with the CME here. Let's take a look at the yen really quick, and then we're going to look at the dollar, and then we're going to come back to the notes. I think come on, charts. Michael, can you go into the forums on eSignal and see what's going on with these charts today? Seemingly, we're not getting daily updates too quick here. All right. All right, we're going to just kind of have to go with what we have here. Here's the weekly situation on the end. Nothing's really changed here from 101.33. Here's the 240-minute situation. So now we poked our head above 119. We came down. We looked at some support, kind of Custer's last stance here on the 240s before we started having technical damage around 117.87. That held. We've gone back. We've gotten above profiles, and that's kind of the on the short-term side. You've got a battle point here at 117.88 rounded off, and you've also got a breakout situation at 118.48. So, but let's see if we got our daily. Nothing. This is an historical data problem here at this stage, so we might have this problem across the board here with these signal because we're getting quotes. Here we go. And we are not seeing our indicators. Okay. That being said, we're going to go to our scanner again and take a look at our currencies. And we're going to look at the USD JPY. All right, we're going to see that the top of our box here is 117.34. We're obviously above there, and we got the confirmation going above our 240s at the same time. So, again, we're well above profiles on our daily. I got to check. Yep. And on the 240s, we got that confirmation above 118.46, which we just talked about. And we're green across the board, I guess, is the most confirming factors for me. It's okay to be long, not okay to be short here. We don't have any hints of this changing direction. Here's the situation here. Here's the daily. Here's that 117.34 we just talked about. And as we had that retracement back a couple of days ago, we didn't talk about this much the other day, 117.34 coupled with our 240s, which are on the scanner, 117.87, so that DMZ held and was a great chance to, buy pullbacks, buy support in a market that's been trending up and not a lot of conflicting information to do anything other than buy dips on the Japanese yen. That's just the way that's worked out. It's been a great trade. And, I was talking about that. We've actually kind of late today coming into the show because the largest hedge fund manager in Japan for the last 10 years, Ed Brogan, has actually come here to visit, and we've been talking. He's actually retired now, but we were actually talking about this yen trade. And, he's a guy that presses the gas pedal when he's right. He's, about 50 years old now, done very well. He's got a graduate degree from Harvard. And, we were just kind of running over some things about this yen trade in the Nikkei, and, he thinks this thing's going to 130, 140. I don't want to get anybody's hopes on trying to buy this thing on the all-time highs here right now, but, there's not a lot standing in the way of this at this stage, and this thing could float in the ether up another 500 pips without even thinking about it. So, don't think that this is the area to short this and this thing's gone up too far too fast. If you look at this is going to regulate this trade for you. The only way, in my opinion, that you can even start thinking about the other side of the yen trade is if we start seeing some breakdown in profiles. And by the way, when we come back from the first break, we'll be looking at the first breakdowns in breadth and profiles on the S&Ps. And I'm going to kind of just point this out to you. As you can see, daily, we've got a great situation here sitting at the daily, but I want to talk about the breadth part of this equation relative to index profiles. So, again, we talk about these speedometers a lot. This is the S&P 500 breadth. And you start seeing some first cracks in the armor here. The market's not open this morning yet, but we're going to kind of review this a little bit when it comes to trading the S&P 500, and we're going to focus on that today a lot because, we haven't had a lot of opportunities over the last 4 or 5 years to really feel deep conviction about being on the short side. I don't feel that yet, and I don't think anybody else should feel that way yet also, but we'll talk about why, my feelings on this may, kind of be a little bit logical for you to think about in the long run when it comes to trading these S&Ps based on this breadth. So we'll be right back, and we're going to continue talking about these S&Ps for a while in the next section, and after that, we're going to look into some scanner picks. So come back to see us, guys.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Before we get into the S&Ps, I want to just kind of cover the dollar a little bit. It's not too much of a reciprocal relationship at all, being sarcastic here, to the yen. 88.41 so-called pre-market here came down and retested this 87.87 area on the dollar. This is our daily situation. If I'm short this thing, I'm freaking out. That's what I'm feeling here. And if I'm wanting to be long, I'm happy that is the other side of the coin feeling that may be out there. Here's the situation on the weekly. I mean, we're just compressing into this thing. And, you guys have been trading for a while who are listening to this show. Normally these, just like the 10-year and the 30-year the other day, or not the other day, a month or two ago, or a couple of weeks ago, whenever that was, where we did that massive move up. I mean, this is not an ending pattern, so to speak. You usually have those ending patterns, as you guys know, with those kind of everybody's got to finally get out and who's on the wrong side, and that hasn't happened yet with the dollar. And this compression, now not going into unfair highs, but actually compressing and consolidating above these unfair highs. This is scary stuff for shorts, and I tell you what, I just think this thing's going to go higher based on technical reasons, and I don't know about the fundamental reasons, but if you put a gun to my head and told me to trade on fundamentals on the dollar, I don't know if I would think that this thing would go a lot higher. But everybody seems to have forgotten any of the other woes that the United States has had when it comes to controlling spending and things like that. I mean, it's kind of the alternative to screwed up situations at this stage in other currencies. And I know you guys have probably, duffel bags full of feelings on that, maybe in different directions, but that's just the kind of way things are here. Here's the, before we get in the S&P's next section, I promise you, the Australian dollar, I've been relatively bearish on this. It's going to have some volatility, folks. Here's the daily situation, and still feel like this thing could get into the 80s. Why? I don't know if okay. I'll take a look at dollar versus. You're talking about the Chinese currency or the Korean currency. I don't know if you spelled that right. I'll get a feeling on that in a second. But here, the Australian dollar here, there's not a lot to regulate the trade on the daily now. We've kind of surpassed that. Here's the short-term numbers on the Australian dollar now. If you guys are trading those, 84.275, unfair highs 84.77. But guess what? A lot of times I won't use the charts, and we'll come in here and try to make some somewhat more objective rules-based decisions looking at the scanner in general. And as I look at the scanner and I come in here and I look at these, again, these are the exact same numbers we just talked about on the scanner. And let me pull those up on the 240 here. 84.27 and 84.77 rounded off. I can actually attain those numbers, 84.27, 84.77, by mousing over these cells and figuring out the profiles. Regardless of what charting package you're using, we actually charge, I think the scanner is $97 for TFNN users. We traditionally charge $200 and upward to have the indicators, and this is a cool situation because the indicators actually also don't give you this information, which will kind of pan into the S&Ps in a little bit and kind of try to figure out what these speedometers mean when it comes to that. You don't get that with the indicators, and you get a heck of a deal with this thing in general. So that's kind of the picture on the Australian dollar. You've got short-term support, again, at 84.27 and resistance at 84.77. And again, we kind of broke stride here a little bit yesterday and a little bit earlier today on the dollar, the Australian dollar. But that's where, if you're trading on the long-term information that we've been talking about, you may want to pass or get stopped out of that and then be able to get back in below, because you don't ever know how far this thing's going to retrace back up. Even with me being bearish as heck on the Australian dollar in general, and have been bearish on this product for a while now, you don't, in a prop trading environment, which I've run many in Chicago. Let me hold that thought and get into that next section, because there's a really good explanation for what I'm going to talk to you about from a risk management standpoint when it comes to this. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Before the break, I was kind of starting to go off on a tangent on risk management a little bit and how a prop environment. Get that thing out. Somebody just put up a screen on the den. Was getting into a little bit about risk management on the prop side, and I was in Chicago in the Board of Trade some downstairs, and we ended up doing a lot upstairs because the floor got to be, you could hear a pin drop down there in some of the pits, and then the game was over, and the arbitrage situations were really had gone away too. So in that environment, upstairs, so to speak, we had floor number 12. There's about 12,000 square feet up there. We paid close to $40,000 a month just for the rent, which I don't think they can get these days. But we had a lot going on up there. One of the things that we did was a prop environment for trading futures, and we started people out in that environment trading Eurostoxx 50 type futures, because it was a little less harrowing than trading the S&Ps or the DAX, and it was a good place to get people trained on to kind of move forward and to figure out the attrition rate. When I say figure out the attrition rate, I mean, what would happen back then is we'd get 5 guys out of college pretty much every month. They had to eat at roly-poly sandwiches. They had to ride the L. They had to pay rent. So we'd put $5,000 basically to them for the month. And then we're talking $25,000 for 5 people. Another month goes by. We got another 5. We got $50,000 into it. And they'd have to, we'd have to figure out if they could trade. And we knew the demographic, or we knew after a while you figure out as far as their background and habits and things like that, you quickly figure out, who to take a shot on and who not to take a shot on. And, it was generally somebody that had played sports before, or somebody that had, maybe not made straight A's and played a little cards and drank a little bit on the weekend. I mean, I'm being serious. I mean, these are the type of people that we looked for. And those were the types of folks who had really kind of taken on risk in their life before, and had really, maybe enjoyed some of that risk, and maybe weren't afraid of that risk, I guess is what I'm trying to say. So all that taken into consideration, we'd have, at the end of 2 months, plus their losses, we'd have $70,000, $80,000 in 10 people, where we knew only 2 of them were going to make the whole, make it and actually start possibly producing money for the firm. And then after they figured out they were kind of special, then they'd go try to shop our deal down LaSalle Street and try to not get 50-50 payout. They try to get 70-30, and it was a pain in the butt. But what I was going to say a while ago was, sorry to go down that road that far, but what I was going to say is as we kind of went into the process with them, and this is a good story in my opinion. It's a good story for anybody trading. We set the machines. I think we used TT pretty much primarily back then to trade futures. It's a great Harris Brumfeld was the guy who originated that. That's a whole other story. I'd like to tell you about some things that he did with that personally. But we'd set the parameters to where if they lost a certain amount of money for the day, it would actually shut the software off. And we actually had somebody come in and set it to where Windows would actually shut the machine down if that particular software actually went that route. So it was almost like go home. So we'd set a guy that we give them some rope. Maybe they had a $350 a day downside that they could suffer before that's it. And we also had situations where if they ended up making $1,000 in a day, then we'd never allow them to give back more than half of what they made. So, what that would mean is, okay, they're up $1,000, pull back to $500, $499, boom. They at least walked away from the day as a profitable situation, and that eliminates the situation where and this is psychologically damaging in my opinion. It messes with my head. If I somehow allow a relatively decent profitable day to turn into a decent negative day, and then then you're kind of in the game psychologically where you're trying to make it back, and sometimes that snowballs into big losses. So it's a very regimented situation that we set up that where the software would technically just put you in a box, and you knew what that box was, and you knew that was the world you had to live in, and therefore you acted more machine-like and more rules-based when it came to trading in general. So that's kind of, the things that, and when I, trade my account, I mean, I've talked to the clearing firms that I talked to, and I'm like, look, can you do this? Can you shut down the software? Can you stop me from trading? Can you do this? And setting these parameters, and they look at it as a compliance issue, that they don't want to get involved in stopping me doing good things for myself or bad things for myself when it comes to my own trading. So it's kind of weird that they don't want to help somebody. If you sign every document saying that squirrels are going to eat through wires and things are going to shut down, and I'm okay with it. They don't want to get involved with that, and it's a shame, because some of the things that we learned in the prop environment, what I'm trying to say is, we're very, very good statistically over time for a trader to be able to move forward and to be in some kind of risk parameter situation that was actually good for them. So just wanted to throw that in. Somebody asked about the Chinese yuan against the dollar. Here's the latest. It's kind of a rigged game in my opinion a lot of times, but trading 6.15 rounded off 1, so 6.151. Unfair highs at 61559. So again, we've been in a little bit of a breakout situation. This is the weekly. If I can get this to move here. Those unfair highs, again, to state those plainly, 61559. To feel really good on a long-term basis about buying this, obviously we need to look at the daily. So we kind of had the troops on the border a little bit earlier here and pop through, but we got to get through the weekly numbers that I just talked about, being 61559, for me to really start feeling kind of long-term bullish about this. Obviously, on an intermediate term situation, you got a trading opportunity that happened being in the middle of the fair auction on the weekly, and then showing some positivity on our navigator at the same time and blowing through unfair highs, coming back. And again, we talk about this all the time, the close above, the come back and retest, the higher move, but you've got to get through those weeklies and get closes above those weekly unfair highs to really start getting bullish about this relationship. So if that makes a little sense, yeah, I'm getting into the S&Ps. Do we have a caller on right now? Okay, we don't. All right, so that's the situation on the yuan. Here's the S&P situation. All right, now that we're getting into this. Okay, all right, here's the scanner, and here's the breadth. And I'm not going to call you guys lucky, but, we're considering not putting this information out. I mean, this is kind of, what we feel is the holy grail, and right now we're giving it out, and anybody grandfathers who gets this right now will be grandfathered in, but we may end up pulling this because we're starting to use it in a lot of automation that we're doing, and that's kind of our thoughts on it. But the market's obviously not open. We don't have any intermediate to long-term crossovers happening yet. So what happened yesterday and the day before? Obviously, we're got some leakage here, nothing fantastic on the 240s and the 60s. So to give a kind of a dissertation on this right now of how I'd look at this, again, we don't have the market open, which is going to flip-flop some things around, but we had some technical damage, and this is our daily. I guess I should start with the weekly. Let me just kind of get this in force here, and I'll go back to it. Here's the situation on the weekly. Nothing new. The breakout, the 2014 to 2019, close above, come back, retest, boom, 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 boom. So, again, the long-term trend is still up. And, folks, the all-time highs, just to kind of put this in perspective for you, all-time highs around 2074, 2075, somewhere up there. We're sitting at 2053, so we're like, 20, 25 points off of all-time highs. I wouldn't call this, lick your lips pullback situation here, and we've definitely changed modes. What's happened here is the breadth is still positive as we see it on a long-term basis. We talked about having a new box appear yesterday. We've kind of gone back up into that box that we were very, very well below when it appeared, and tested the unfair lows. And that action today, highs are 2059. Those unfair lows are 2059. So let's just kind of reiterate this. Sometimes these signals charts don't actually look totally cool here, but the highs today are 2059, and the unfair lows are 2059. So we've hit that to the tick, and this will give you a little bit of hopefully a mental impact of how powerful these profiles are sometimes. And by the way, I will pull this up, get rid of the breadth here, and I'll go down to my S&P minis, and I'll see that 2059, 25 unfair lows as I mouse over. So this kind of gives you all this. Again, trend is still up in the long term, kind of in the middle of a fair auction with 60 and 240s. But the breadth still being positive, I'm still not having deep convictions that we're to sell everything in the world when it comes to these pullbacks. And just from a default nature, when you have this and you have this, and you've got a battle point right there in a high probability setup, you want to, take shots at things like that. But I'll be honest with you, even though this has been a decent little trade and selling resistance and things like that, looking at the breadth and still seeing that the breadth has been positive. Now that may change as soon as the market kind of becomes active, because these are based on, remember that these are based on, these numbers that you're seeing right here are based on the internals. Right? And the internals of the S&P 500, the 500 stocks, this is saying basically that the weekly and daily breadth, and as soon as some of these stocks start opening, this daily may change to negative. Now, I just don't know what's going on yet, and I don't have the time to go surf through every single stock and try to figure out where some of the pre-markets are going to open. But you got some cracks in the armor here. But unless this folds over to negative and start showing our first intermediate signs that the internals of the S&P, all the 500 stocks, relative to profiles on each one of those internal instruments, start showing a more negative breadth than positive, then I'm not going to be the one to come in here and raise my hand and say, hey, I picked the top here. I mean, I'd like to see a little more confirmation. This market is still in an uptrend, and there's some decently weird, bad news out there right now. But taking it for what it's worth, the internals of the marketplace are not really telling me yet that this thing is time to load up, back the truck up and load up the shorts on this thing yet. We are, again, just to put it in perspective for you, we're about 20 points off all-time highs. So in my opinion, don't get too excited about a 20 to 30 point pullback in the S&Ps when you're trying to change positions. This is a portfolio regulator, is what I like to call it, this breadth. And you can get this for next to nothing off some of the trials that TFNN is offering. And I'm doing a webinar on how to read this in very decent details versus trading and how to use the scanner on December 9th. If you sign up for a trial of this, which is free, you'll get access to that webinar. And I'm actually flying back to the States this weekend, and we'll be doing this from North Carolina on December 9th. So I think it's a good thing for you guys to look at, if nothing else, just to kind of get some information. And maybe it's something you can use. Maybe it's something you can put in your tool belt as you're kind of trading in general in some of these indices. And we'll be looking at more than the S&P 500 here. And we're adding ETFs and internals of ETFs into this. So every time we add more upgrades to this, you'll be privy to those. We'll come back for the last 5 minutes, folks, in just a little bit, and talk a little bit more about some of these indexes.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Was just perusing through the scanner here, and just wanted you to see the process. We're actually putting again into the, let me go to the market breadth for a second. So what we're doing here also is we're creating baskets of stocks that are ETF baskets, and also showing this is such a great concept we found out that we'd love to be able to kind of be forthcoming on as much as we can, which would now be ETF baskets. And actually what's really, really cool what that lady saying in the Matrix? What'll really bake your noodle is some of the portfolio managers, which this is ultra cool. They wanted to be able to dump their portfolios. They're long, a lot of their charters only allow, yeah, exactly, right. They'll only allow them to be long, right? So they either have to be long and then buy puts or whatever. They can't go short. So they wanted to put their portfolio, some of the guys we were talking to, and treat their whole portfolio as a breadth. So if the breadth of their portfolio from the long side being, you guys know how if you've been watching the show, you know how we're doing some of this breadth information relative to profiles. So if they've got 292 stocks, we dump those into, what's the breadth, positive or negative, for their portfolio, and what's the breadth of the index or the ETFs or whatever that are, kind of surrounding their portfolio, and is their portfolio net positive or net negative relative to breadth on a relative scale. So, there's a lot of cool things going on with this right now, but we're going to be able to kind of give you grandfathered in a lot of the things that we come out with, and we charge don't know what term to use, but we charge a decent amount of money to some of these folks to do some of these things for them. And, what is that? That's a rounding error when it comes to what does it mean for them to gain an edge trading $1 billion. It's, it's not even, it's non-existent, basically. So forgot to mention that earlier. So what we're going to do here is we're going to take a look at the S&P 500. We're going to go to some of our basic scans here. We're going to figure out, what is trading below the box on a daily. We're going to choose that, and as they say in North Carolina, Viola. Here we go. Starting to show some cracks here. As you can see, a lot of stocks starting to trade below profiles here. And there's some ripe opportunities. And some of those ripe opportunities, Dun & Bradstreet, in my opinion, you got a yellow box there on the weekly. PFG, that's not Peregrine Financial Group, is it? No, that's Principal Financial Group. I'd like to talk about that story tomorrow. It's quite amazing. If anybody, I apologize if anybody had money in PFG in the future side when that happened, but the guy that the president, the CEO, I actually knew him when I was in Chicago, and I'd like to talk about that at some point if you guys want to listen. Got some other decent high probability situations, Joy Global Incorporated, and we're going to talk about, why am I picking these stocks out just glancing over this. And it's kind of like when there's, again, to make a matrix reference, it's kind of like when you start seeing the green code, you don't look at the video anymore. And this is one of the neat things about using this, is it kind of allows you to kind of peruse around and not stick with the same usual suspects all the time, and maybe broaden your horizon a little bit when it comes to high probability setups. You guys have been great today. Look forward to talking to you again tomorrow. And you guys get a trial scanner, you'll be able to get to that webinar on Tuesday, December 9th, which I'll be doing from the USA. Thanks, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.